Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on the Monday before Christmas, where we have yet another silver rally. Today we had a big gold rally as well. Price is absolutely soaring, and as we will dig into, also an indication of similar, not as extreme as what we saw 2 months ago, but indications that this metal, especially, well, particularly on the silver side, where there were shortage issues that have not been resolved, and we're getting indications that it's not coming along smoothly, shall we say. So anyway, let us dig in and take a quick look at the price where, wow, look at the gold market right now. The future's up 96.40, spot gold up $110, which kind of puts a big hole in my plan. I actually had some cash come in, was hoping to buy a couple of ounces of gold, was selfishly waiting for the pullback, which, as you can see, has certainly not arrived yet. So, that aside, great news if you do own gold. Fortunately, I have some, and it's worth a bit more today. And again, I might add that as we take, actually, we can go over here to take a look at the gold price. That yeah, new all-time high again today, and we're actually at 4,483.60. We're only off by about up to 90 now. Well, we're only off 50 cents from the all-time high, which was set earlier today. A theme that we've seen happen play out repeatedly over the past year, 2 years now. This rally that really began in January of 2024, and we won't just talk about it. We will show you there. You see back in the end of 2023, gold doing all right, but we get there. There's the beginning of 2024. Actually, under $2,000 was the low. And now there we are, more than doubled in the last 2 years. Certainly, I know for many people who've been watching the metals for a while, not always the easiest journey yet. Man, it seems like this time the reward has played out over to silver. Some interesting things happening there where we have the spot price and the futures price just about even now, just under $69. And here's the thing that caught my eye is that this has been moving around today. Again, traditionally the futures, which is the line where you see March 26th, because they're talking about the March futures of next year, the new front month contract, versus the spot price, the XAG USD. Normally futures trades over spot. And that's what is normalization, and backwardation is when the spot price trades over the futures, which we saw happen, especially back in October when there was a shortage of metal in London. And that got as high as $3 into backwardation, which I don't think even during the Hunt brothers time that got anywhere near that wide. So that was a historical precedent, which many, myself included, said was the day that the silver market broke, and they've patched it back together, although not fixed. Because what's interesting is that here you look back on this is from December 17th, so 5 days ago. Let's say that's Wednesday. And here you see the 65.95. So the futures was trading over the spot price. And I remember in one of these columns, within the past 2 weeks, it got as high as 60 cents over. I remember because we made a video about it, talking about it. And now that 60 cents has disappeared. And I guess technically you could say at the time of this recording, by a less than a penny, by 7/10 of a penny, the market has normalized, although. Here you go. Just what did I put? Did I say it was in backwardation in the title? Well, just to prove that that was the case when I set the title up, and still same net effective point. But here you go, earlier today. And this got a little wider into backwardation, but here you can see that the market was in backwardation earlier this morning. So again, it's changing a lot. And on one hand, I think that's certainly normal. I know there's a tendency to think that the banks know this or that. I would suggest that I don't think there's anyone who knows exactly how this is going to play out. I'll maintain my belief that you saw the metal leave the COMEX, go back to London. I don't think it was enough to permanently resolve this. We're still running a deficit. which, if you include the ETFs, is has just set a new record. And the other thing is that ETFs continue to pull money in, which is traditionally what happens during a rally. So whether that's going to change or not, we shall see. But in either case, the fact that this spread is coming back in, I know that may seem like a small thing. Hey, who cares about futures versus spot? But that was really what happened back in October. And the indication of when there's issues with where the metal is, how much metal would go back over in conditions like these. I don't think we're at that point yet, but anyway, something to keep an eye on. And again, that also has a lot to do these issues of tightness with metal. Again, metal went from COMEX, also from China over to London, and now China has an issue. It seems like the straw that broke the proverbial camel's back was India having their surge. And I might add, as you may have seen last week, they just added gold and silver to pension plans. So now Indian pension plans can buy gold and silver too. And we'll just see how some of these flows shake out over the next couple of months. Certainly over the next year, it's going to be fascinating to watch. In terms of what Bloomberg was saying about today's rally. And by the way, quick note, we will be taking questions today. So I'm going to finish up a few other things here. Actually, basically just go through this article. And if you have a question that you've been waiting to ask for a while, get those ready. Don't send them in yet, but let's just take a quick look through here because they wrote that gold and silver hit all-time highs as geopolitical tensions rise. As I was thinking about it when I was writing this morning's Substack column, yeah, I mean, I'm sure the Venezuela thing is not helping, but I don't think that gold and silver are hitting all-time highs primarily because of geopolitical tensions. I don't know that I can prove this, but the box I would select in the pool would be that you're kind of seeing the effects of something that was on a long enough time scale inevitable. You've heard people talking about this for years. Heard me talking about it for years, maybe. Gatta, Dave Kranzler, everyone else who's Egon von Greyerz, Eric Sprott, especially the silver imbalance that started really in 2020 as the demand started to grow industrially. It's fascinating. This is still happening while retail customers are selling a lot of silver. That has not stopped yet. So makes you wonder, well, what happens when we actually get a crisis, and what happens when, which traditionally is what spurs people to actually buy physical. What happens when the silver sellers turn to buyers? Again, it's not just to say like, oh, the U.S. well, they're one, out of many markets, although they're the dominant market. It's generally usually them or India, and in recent years, I think it was 2022 maybe. That US even retail was 50% of the investment market. So you have the big difference between gold, where the central banks are buying, yet in silver, you have the largest retail customers selling. So even despite all of that, eventually deficits matter. I know Dick Cheney doesn't think so. He just gets the Fed to print the balance. But I think really the pressure to patch things over with paper money, the everything that's happening with the bricks, I think all of these things are adding up. And now I don't know if I would say this is the blow off, because what's stunning to me is this is all before anything regarding the global debt loads have been addressed, which I would say if there was one primary reason that attracted me to gold and silver, that was at the top of the list. That hasn't even happened yet. So anyway, long tangential disagreement of the headline. I don't doubt that that's factoring in, but here they mention as escalating geopolitical tensions and bets on further U.S. rate cuts add momentum. Now, I do think that's factoring in, but here's what I don't get. If we look back, let's go back to this one because it was just over a week ago where Trump came out and said someone actually asked about his preferred interest rate level a year from now. Trump stated 1% and maybe lower than that. I'm sure it's one thing for a politician just to say this or that, but let's remember that he is in line to name his nominee for the next Fed chairman. So it's not as if these are unconnected. I mean, he's going to put in the guy that he wants, and yet you look over at the Fed futures curve. Let's get that ad out of the way. And you saw over the last month as gold and silver were soaring, where they were saying, well, this is because of the December rate cut, which I might add the Fed even penciled in back in, what was it, their July dot plot, June dot plot, a couple dot plots ago. They even said they were give another rate cut. So it was priced in. I don't know, about a month ago, Wall Street decided, well, maybe they won't cut. And now, again, as I just went through, I don't think the reason that gold and silver are soaring is solely because of that December rate cut. I'm sure it factored in, yet here you go. Current, we're at 350 to 375. So this shows the probabilities as you go farther out. So they're pricing in 80% chance of staying pat in January, 47 still the favorite for March. So they're only talking about a rate cut, the that it being cut being the favorite by April. They have two cuts getting down to the 3 to 325 range, 50 basis points lower. Here's Trump's he didn't even fit on the chart with his 1% or lower. It's somewhere over here. So that just strikes me as odd. If he wasn't about to name the next Fed chairman, then okay, different story. But and somehow they have cut in July of 20, not next year, of 2027, and then goes back up a quarter point at the following meeting. So how that reconciles with Trump about to name the Fed chair. Also said the Fed chair should consult with him on interest rates decisions. So it just makes me wonder because I was thinking about it over the weekend where, all right, we see what's happening now. So close your eyes along with me for a second, if you will, here. Not if you're driving, but if you're sitting somewhere and you can, think about what you've just witnessed over the last month, 2, 3 months. And if they're actually taking interest rates even anywhere close to one, what is it going to be like in May of next year if interest rates, you can open your eyes back up here. I mean, if we're I forget exactly when the new chairman would come in, but let's say like we're in July and they're talking about, well, we take it from 2.25 down to 175. Just think about what would have to happen to get to that point. I mean, unless somehow Trump picks someone who's not going to cut interest rates, 1% at the end of 2026. Well, they got 3 to 3.25. So if Wall Street's expecting 3% and they're going to get less than 1%, how do you think the metals are going to react to that? And I think that's the big thing that people are missing. Here they mention rising geopolitical tensions in Venezuela, while Ukraine attacked an oil tanker from Russia. So it doesn't seem like the war is going to end in one day. I think it was Vince who mentioned Europeans some update about trying to confiscate the frozen Russian assets. It's far from my field of expertise, although the different commentary I listened to, it sure seems as if Europe, whether it is in their best interest or whether they would be successful, that they feel like they're staking a flag in the ground against Russia, which of course is, for the sake of human life, not seemingly going in a good direction. But anyway, here we go. Goldman Sachs, among several banks who predict prices will keep up with the base case of 4,900 an ounce from risk to the upside. I know it's fun hearing what people are expecting by Christmas, which end of the year, only 9 days away now. I don't think we'll have 4,900 by the end of the year, although perhaps not impossible either, just the way these markets are moving. Platinum, quite a move there lately as well, was having quite a big day. And here you see Silver's recent advance has been buoyed by speculative inflows and lingering supply dislocations across major trading hubs following a short squeeze in October. So it's confirming I'm not making up what I was saying earlier. And there's the platinum rally. So that's in the end how you get to a $69 silver price. We're back over into 69 range. And with that said, I'm going to look over at the comments now. So if you did have a question, I'll be happy to see which ones I can answer here. So fire in any questions right now. And looks like In It to Win It is going for a run. Hope you're out there. Great to be exercising. Especially now that you have all this gold and silver, want to stay in good health. And I hear Steve Barton is in live chat, who I had the pleasure of meeting at the Rick Rule Symposium. Then we did an interview earlier this year. So, Steve, nice to see you in there. Accidental Homie, are you doing a Friday video? I will not be doing a Friday video. Actually, I'm going to take a few days off next week, or at least attempt to. Didn't quite work out that way last time I tried earlier this year. Um, Although, actually, going to be traveling around the South a little bit, scouting out my new home. So, anyway, I will not be doing a video Friday, but let's see if anyone else has any other questions. Hey, Chris, what do you think about the next silver mining miners' earnings coming up? Well, you would think they would be doing all right. In fact, I had this pulled up, some notes from First Majestic Silver, as they had some news out there, sponsored to our show. And I mean, I guess, well, I mean, they've certainly had their share of tough breaks in the last few years. And I don't know that when they did the deal with Gatos, they knew that a year later, the silver price was going to be above $69. But with that said, seems like everything with the deal went through well, and basically they've increased their exposure to the amount of silver they have as the price is rising. So, I mean, obviously that's a good combination of events when you have that. Here is First Majestic at 591 up to 1752 now. So more than triple or about a triple, depending on which point you use there. But I mean, in general, I know a lot of people are disappointed about the miners. I remember last week getting a lot of comments. How come silver's up 4% and my mining stocks aren't up? And you can make an argument of how it should work, although I would suggest I used to track that on a more close basis day to day. Now I find that there's a lot of benefit to figuring out what you need to know and spending your time in front of the computer and not being glued to every tick. And in the end, whether we like it or not, they're not always correlated on a day-to-day basis. The miners also do have news, not every day. So, and you also have days where the miners are up quite a bit and bullion is down or flat. With that said, and I'll say that on behalf of people who know the mining stocks better than I do. I've been wondering because obviously we know the mining stocks got absolutely torched 2022, 2023. Although the folks that really dig into the mining stocks that I talk with, and again, this is not any sort of financial advice, but as I've been sitting here thinking like, all right, well, we've had this big rally in the metals and if I have some cash and want to buy miners, have I missed the boat? And I don't think these people are talking their book. I mean, some are people you would know, some are personal friends that you wouldn't, yet maybe they're biased by their investment, perhaps. Although I think I've spoken with enough that when you look at where the bullion prices are now and modeled out the cash flows of the miners or what you're expecting, that there's a consensus that a lot of the mining stock people that I talk with feel that they're still undervalued. I think the other thing is that right now there's still a large portion of the world that sees this completely differently than you probably do. So what I'm getting at there is that It's been a while since I've seen them, although we saw Goldman's gold forecast. But often it's like if you look at the silver or gold prices they put into their assumptions of, okay, miner XYZ 2 years out, 5 years out, let's say they hit their production targets, they still have to bake in gold and silver price assumptions, which are generally going to be, I would say, with most of the banks, they're looking at this much differently than what I see on my Twitter feed, where people are saying, when do we hit 100? When do we hit 600? Interesting that 100 isn't seeming quite as silly an idea as some might have suggested a while ago. I didn't know whether we were going to hit triple digits, although seeing the move from 50 to 70. I remember David Morgan for years was saying, watch out when we get 50, straight shot to 70. Turned out to be right about that one. Um, Now, if you had if you have silver at 69 bucks now, and let's say you have silver squeeze part, well, I mean, if you called the first one in 2021 part one, and then 2 months ago part two, if you called this one part three, but let's say we actually get to the point where there is a scramble because free floating silver, which last I checked was still well under the London daily turnover, and someone can't get their silver. I mean, I can't guarantee it, but I've always thought if you get that sort of environment, or actually the cocoa price is right down here. I mean, that's essentially what happened in the cocoa market. Oh, wow. And look at cocoa, it's getting a little bit cheaper. Where basically they ended up with a shortage, and this is a great chart here. So you see here in the 70s and 80s it spiked, but I mean for the better part of 40, 30, 40 years, you see it was hovering around that $2,500 per contract mark. Then, as you can see, they ran into supply issues, got over, I don't remember if it cracked 12,000 or not. So, has come back down quite a bit, but I think that's an assumption probably that many of the banks have in terms of the gold and silver pricing. So takeaway from that is that the longer it stays there, because right now you're talking about theoretical money being earned, which they very well and hopefully will do. But if the price of gold went back to 2,000 bucks next year, then it didn't matter, if it was there for a while, unless you actually sold metal there. So my suspicion is that basically the longer you see the prices elevated, the more that these companies are actually capturing it. I mean, a lot of companies have been having good earnings this year. I mean, you leave the I mean, the gold companies were already doing really well. The silver companies, I don't know, maybe it's like some point mid-year we're starting to do better. I mean, now silver companies that are producers, I mean, even the juniors are soaring, most of them. Again, I would say, as what I hear, many still feel below fair market value. I mean, but things are definitely moving, and longer the price stays up there, if you see big earnings from the miners, then that certainly is one of the things that can start attracting other mainstream audience that isn't traditionally looking at gold and silver. So anyway, hopefully that helped on the miners. A few thoughts to keep in mind. And let's see, I saw another one pop in here. Okay, here we go from Macaroni. What inning of a baseball game are we in regarding the price of silver? Wow. That's another good one because I sat here over the past month thinking, gee, well, it's great the price is up. Is this still a buying opportunity? I would say a lot of that depends on your time horizon. Don't take this the wrong way, and I don't want to ruffle anyone's feathers, but when you have this, let's just take a look at the last 3 months. So here we are below on 4805 low on November 20th. So slightly over a month ago. So we went from 48 to 69 in about a month. Hopefully, I'm wrong about this, but just given how I've seen these markets trade, how I've seen any market trade since I've been looking at markets, there's probably going to be a day at some point where you wake up and silver's down $3 or $4 or something big, which doesn't necessarily mean anything in the grander scheme of things, but when you have that type of rally, I'm not guaranteeing that it will happen. I don't know that, but I think that the probability of that happening at some point, these things don't normally go straight up. I would say the difference is that again, if you run into another supply issue, then which I would say still is kind of hard to see that not eventually happening, especially if you got retail buying again. So, um, but back to your question of are we in the early innings? I want to distinguish between because there's a difference in gold and silver, and I guess over the past half year, and Luke Groman has been really helpful listening to his columns. Where some ways it was easier to me to see in gold because when you combine everything between, us realizing maybe counting on China for manufacturing, especially for the defense industry, isn't the best idea and the effort to reshore and rebuild, and that you're going to get inflation, and the only release valve seems to be the gold price, let alone when the US Treasury investors wake up and see, like, oh, maybe this negative real yield isn't going to get any better anytime soon, especially because of that inflation. So it's just like when you see something that's bankrupt, we don't know when, but that's the real thing in my mind. Like when does money really start to leave the treasury markets, not just in the US, but elsewhere in size and look for a new home while we already see where gold is going? So, again, what's going to happen next month? Hit the subscribe button and notification bell, and I will tell you next month what has happened by then. Yet, if I'm sitting here thinking, all right, I have some money that I just want to have safe 10 years from now, man, it's hard to see the gold price being lower 10 years from now. So, let alone the whole de-dollarization and BRICS thing. So, if all these things continue on the same track that they are on, I've actually in gold, I've come around to the argument that we could well still be in the early innings. I just don't. I used to think maybe there was some, the banks always have these crafty different tricks. Who knew they were going to come up with QE or, Operation Twist or any of this other stuff? And I would wonder, I don't know, maybe there's some trick they can come up with to get rid of the debt. I've searched. I don't think there is. And I think at some point, you're probably going to have that gold price revaluation. And in terms of that, I would suggest there's two types. One would be just revaluing the gold certificates to the current market price. Well, as you may remember if you saw this when I mentioned a couple months ago, it's interesting because that would be the minor version. But even in that version, because what happens if they revalue those Fed certificates, the US Treasury gets a direct cash, you know, booster from the Fed. So the higher the price is when they were to do that, the more money that would be going into the government, which obviously we know if there's more money going somewhere and someone's controlling it, then may want to be prepared for that outcome. And then the other one would be is if at some point it's like, all right, to repatriate debt, we raise the gold price to 20,000 or $40,000. What is it? 261 million ounces. So I think every $4,000 you raise the gold price could conceivably knock out a trillion of debt. I think over a long enough, I mean, if you said in the next 20 years, what are the chances of that happening? I would think they would be pretty high. So, but I mean, otherwise, and here's the thing, like, even if they did that, unless government stops spending, which outside of a radical overhaul of the political system, I don't see how that occurs. It's Also fascinating because I remember thinking, well, all right, let's say they reset it. What then? Well, 20, 40, 100 years later, probably be in the same point until this is resolved. Or again, if the BRICS really, and I heard Pepe Escobar stepped up his timeline in that article I mentioned last week, where if they move forward with the unit, continue to wonder what happens if the East is basically offering a, a payment for oil or other traded goods that has gold backing and the West doesn't offer that. I mean, isn't that steer investment one way? So with gold, hopefully that answers. Now with silver, and I'd wonder because it's like so far now we've seen Russia, Saudi Arabia add some silver on a central bank or governmental level. If that continues, that could certainly make the silver trajectory look a lot more like gold. Because it hasn't had its monetary premium yet, I've been less sure. Although then, I was remembering something. Actually, do I have that one pulled up here? Well, I'd written down a couple months ago how people were saying, all right, well, the U.S. just confirmed the strategic mineral, the silver as a strategic mineral after adding it to the draft list in August. And I think it was October, they confirmed it. I think silver might have been down like 20 or 30 cents that day. And I was getting questions like, hey, well, if they confirmed it, how come this isn't moving it? And I remember thinking that, yes, they confirmed it, although that seemed more like one of those developments where it's like something happens now and like the market doesn't really know how that's going to be priced in yet. As time unfolds, one government does this, then it was after that Vince reported how China put a restriction on silver exports. It's like now we're seeing the scramble with some of the different things that are coming out for silver. And Luke Groman shared a comment from someone who wrote about really how they expect that to play out and just the general lack of resources we have to build the things that basically we need to build. And I suggest that one way or another, they're going to build however long it takes and however much it costs, and that the payment is going to be in the form of inflation. So could let me put it like this. Do I think there's an incredibly high chance we could see the price of silver go below $60? I mean, not incredibly high, but there's a good chance. I think we're going to see volatility in both directions. I'm not trying to ruin anyone's Christmas here, but just saying that the path is not going to be a straight line, but between the supply issues, I think we'll probably, I don't expect it'll be that much longer until we run into another supply issue, especially with what we've heard out of China, where the heart of the solar panel and other industrial usage is running low. So there are nuances and slightly different, yet I think gold, let me put it like this. I think gold, you can make a more, you can, or I, you're not, I won't say what anyone else would do. I would have a higher degree of confidence of gold being in the earlier innings over a longer period of time. Think silver will likely do the same. And then there's a degree that if gold moves, silver naturally follows it. So I think give yourself 10 or 20 years, you'll be stunned at what happened in the same way. I don't know, hopefully I have some track record. 10 or 15 years ago, I said we were going to go back over 50, and here we are, sure enough, with a lot of unknowns, but certainly a lot of events highlighting a path where this could still be early. So hopefully that answers that. And I'll take a few more. Dana says Bix Weir says it will go 1-to-1. I'm not sure that I would agree with that one, but who knows? Maybe he will be right. And let's see. We have, okay, when considering natural occurrence and production capability, it seems silver has a much closer trade ratio to gold than recognized. What would you expect in correction, if any, if if any, if applied. Space Miner, if you want to help me understand exactly what you're asking there, I'm not quite sure I get the heart of your question, although I will add that I believe of last year, the actual mining ratio was about, it dropped under 7 to 1. So, yes, there's certainly a great case to be made. And again, that's the big difference. All the gold is still out there, but the silver, a lot of it's getting consumed. So that's why, to me, I mean, there's a lot of things to focus on in silver, but the big thing would be, especially if you do get an even more overt shortage than what we had last time. Um, I was also reading an article where, and I've heard this before, but yeah, there's silver in the Earth's crust, but we've gotten the majority of the easy part to dig up to. What's on the roof that Chris keeps looking up? Well, I actually have some cool lights on the roof, although that's an eye accessing cue. Forget which way it goes, but one way you look and you're lying, and the other way is when you're recalling information. So I'm just kind of thinking as we go along here, and my tendency is to look up. Dana wants 10 to 1. Well, Dana, I hope you get it. As someone who is more silver heavy than gold, that would work for me. Let's see. If anybody else has a question, I can take a few more. I'm going to scroll back through here. How about while I do that, I'll pass along a quick note. So, anyone has any final questions, put them in there, and I'll check in just a moment. Although, I did want to thank First Majestic Silver we talked about earlier, longtime sponsor of the show, and the sponsors of this show have really made this possible to be able to do this for the last couple of years. And obviously, it's been pretty exciting to see First Majestic have the success they are having this year. Might also add they did have some news out last week because. Oh yes, there we go. They released some results from the Santa Elena, some of their prospects there, including Navidad and Santo Nino, where they are starting scoping level studies. So moving things forward, they had some additional drill results. And obviously, a big part of mining is replacing what you dig up. So they have been actively doing that. And the link to access these in the description field below. And also, they announced they're proposing a sale of their Del Toro silver mine for up to $60 million, and that would be to Sierra Madre, who they did another deal with a couple of years ago. So you can see they're reprioritizing their different projects there and continuing exploration. And again, as I mentioned, sure was a great time to get the increased silver exposure from Gatos Silver, who they acquired last year and now reaping the benefits of that. So again, one final thank you to First Majestic for bringing us today's show. And let me take a look back in here to see. Doesn't First Majestic have one mine on care and maintenance? Yes, that is the Jarrett Canyon mine. And I've wondered before how the rise, obviously the gold price is a lot higher now than at any other point in time. And I've wondered before, I know that they've been working on it, continuing exploration there. And fortunately, I forget the date. I think it might be the day before New Year's, but I have Keith Newmeyer scheduled to come back on. So we'll definitely ask him about that. Will be a lot to dig into with Keith. Haven't talked with him about the silver rally yet, so that will be fun. But yes, Jarrett Canyon is on care and maintenance. And when, okay. Oh, all right, here we go. We got some questions. We got some guy named Colin Gooch 294. When is the next version of the Silver Short book coming out? And is Jeff Curry providing vocals for the audio version? Now, in case nobody here knows Colin, my man, he loves him some Jeff Curry. Put Curry on it for Colin. Colin, actually a valued member of the silver community because he helps to track the below ground open interest that Jeff spoke of on Bloomberg in the middle of Silver Squeeze when he was saying that the squeeze couldn't occur unless the ETFs go out and illegally against their prospectus short futures on the COMEX, which they're forbidden from doing, but nonetheless. So anyway, if you want to get your Jeffy bobblehead doll or action figure, at Colin Gooch 294, the man to talk to. When is the next version of the Silver Short book coming out? I mentioned before we've been doing the updates and made a lot of progress. I'm waiting for the edits on one final part. Actually checked in with it editor this morning. So short answer, I don't know, but it's getting very close. And I might add, we one of the bonus chapters for the update we added was an interview I did with Vince Lancy, which I thought we were going to go like 20 or 30 minutes. It ended up being, I think, an hour and 40 minutes, although my man put on a master class on that one. And in case you ever hear him talking about the sheet, his new term, mercantilist bugger. You'll find out more about that. His great analogies, like, when the metal's here, they say, like, registered's up, eligible's down, or they just put a sheet over it and magically it's there. So that will be in there, and I'll share that one on the channel before the book comes out, but hopefully soon. And Greg Padberg says, we'll be speaking with Keith Newmeyer from AG in the new year. Most likely in the new year, although as I just mentioned, shortly before the end of the year, he is scheduled to come on. So I am going to scroll here. Jolly Lollipop, thank you kindly for that. That's nice of you to make a donation. Let's see what Jolly said. Somebody told me that the U.S. government will confiscate all gold and silver using robot dogs, drones, and Army Rangers with shotguns. I had not heard that. That's another thing that Luke Groman talks about quite a bit, where if they really wanted to confiscate wealth, he says often, well, they could just say, if you don't have 20% of your 401k in U.S. Treasuries, then you lose the tax break. I can't guarantee that they won't do that. And certainly the attempt by Italy to tax existing gold is concerning. I don't think that we'll be having robot dogs chasing us in the near future. I hope not, but again, I guess if there's advice I could give to that, certainly the diversification of physical holdings, worthwhile concept to explore. Obviously, everyone's going to be different. If you have 1 ounce of gold, you probably don't need to get a storage vault, but if you have several $1 million worth of gold and silver, I would certainly explore some inside of the country, some outside of the country. I mean, that's something, again, is going to be very specifically tailored, yet just the idea of diversification. So, God forbid something happens here or there, that it is not your whole stack. So, all right. I think we're going to be about wrapping up here. We'll see if there were any other questions. What are you thinking of Aya Gold and Silver? I've heard good things, but would not say I'm well versed. I know Jim Willie is hot on XRP. Jim Rickard said it wouldn't surprise him if gold hits 10,000 in 2026. It could certainly happen. I don't know if that would be a lock. Um, so it could be right. Let's see, did we have anything else here? I do not see any other questions, so I think we're going to wrap up for now, especially because mi hombre Nibbles, he's excited. I promised him we were going to Barkyard tonight, so that is a place nearby where cool spot. Lots of dogs hanging out, the people go and hang out and stuff for him to run through. And I know Nibbles, just like everyone else, is excited about that 6903 silver. Let's take one final look here. Gold still up, 93 in the futures, 105 in the spot. Now, silver 3 cents into normalization. So, anyway, I'm planning to do a video tomorrow I don't know about Wednesday, but I'll definitely do one more this week. And then Thursday we have Christmas and going to be taking a few days off next week. I think Vince is still been trying to get an answer of whether he's taking off. I told him he should take off for, I mean, as anyone who's on his email list knows, the guy's sending stuff out left, right, and center, and we want him fresh and ready to go to cover everything next year. And if I may say so, I mean, hey, maybe I'm biased because he's part of our channel here, although it's like a lot of the things he was talking about 2, 3 years ago, they're happening now. So really has been quite wonderful to have him doing that morning show and just getting to know him. So we'll see later this week. Next week might be a little light, but again, we'll have Keith on Friday. And anyway, if something big happens, I'll come here and talk about it. And in either case, I just really do hope you're all having a wonderful day out there, enjoying seeing this history that so many of us have waited so long to see it be made. And anyway, happy holidays if you celebrate Hanukkah, Christmas, anything else that I'm missing. Hopefully, you can just smile and be happy. And I mean, for gold and silver investors, what else for a present could you want than what we've seen here this year? So, congratulations to all of you stuck with this. I think it'll be something we'll all be proud of for a long time, especially if it turns out we're in the early innings of these things. So, with that said, go have a great night. Thank you for being here, and we'll see you again tomorrow.